Live. This is Josh Jelinski, the financial quarterback, and we have special guest Stan Harley, the chief market strategist of Wealth Quarterback, and he is here with us to discuss his latest in stock market analysis and technical analysis. So, backed by popular demand, the listeners said, "Hey, what does Stan think is happening in the markets? Are they too bloated? Are the markets too high? Are they too low? Are we due for a correction? Where are we headed?" First, let's do an update, Stan, with your background for those who are not familiar with your work with our firm.
Josh, I came from the West Coast, and I published a market report for the past 25 years. And you have invited me to be a guest on your firm many times. And of course, last year I joined the firm, and I'm just thrilled to be here.
And it's great to have you. And before that, you were are you allowed to say this? You're a pilot? Or
I am. Right out of college, I went in the Navy. I was a naval aviator. Flew the F-4 Phantom, the F-14 Tomcat. I attended the Navy Fighter Weapons School. Called Top Gun, and did some work after the Navy. Went back to grad school, got a master's degree at UCLA. I worked in aerospace for a number of years with Northrop Grumman. And then in the mid-'90s, I got involved in the financial business, and I've been doing this full time.
So you're sort of like Tom Cruise, but much better looking.
Yeah, well... But I can't carry a tune at the bar as well as he can. Let's put it that way.
Yeah, well, we have to do that. And then, so people, if you want to look and see what Stan looks like, maybe you've never seen him before, you can go on our YouTube channel. And you get to watch our YouTube live. Right now, you get to ask any financial question you have right now in the chat box on technical analysis, market cycles, market highs, gold, the S&P, whatever it might be. This is your chance to ask your technical analysis questions to market strategist at our firm, Stan Harley, and 25-year, plus year veteran of the markets, Top Gun fighter pilot, veteran. Thank you for your service, Stan. They don't make them like they used to. And then the other thing, so you, Top Gun fighter pilot, you have an MBA from UT Austin. Didn't you have an undergrad in aerospace engineer? Does that make you a rocket scientist or no?
Yes, my undergrad is in aerospace engineering from UT Austin, and my focus in my studies at University of Texas was orbital mechanics. So I did a lot of research, a lot of courses in analyzing and computing orbits for satellites, spacecraft, comets, planets, and that sort of thing. That was my primary focus.
Wow, that must.
I had a job offer at JPL to be a mission planner right out of school, and so I had that, and I had the U.S. Navy, two competing job offers, and boy, it was a tough call, but I ended up going with the Navy and did that. But had I not pursued the Navy, it would have been a NASA employee for a career, and that would have been a great career as well.
So, aerospace engineer, actually, we never asked you this one. What are the parallels between studying of the orbits and the study of markets and cycles and things of that nature? Are there any parallels?
Well, that's a good question. Engineers, scientists want to try to find a formula, an answer for everything. There is no answer. Well, it depends. I mean, if we want to put a spacecraft into orbit, or if we want to go to the moon, or if we want to go to Pluto, there's a lot of very, very detailed numerical analysis that goes into that process. And I have taken that same mindset, if you will, and used it to apply to the markets. And what I have done over a lifetime of study with the markets is just that, trying to model the financial markets mathematically, statistically, regression modeling, and then with that modeling, try to project into the future and assess where I think the next significant highs and the next significant lows are likely to occur within some modicum amount of tolerance.
So as it relates to regression analysis, what do you mean by that? What does regression analysis mean?
What statisticians do is they will assess any form of data under conditions of uncertainty. They will take the data stream and then try to put it into a mathematical model. A linear regression, for example, seeks to find a series of data points and to compute a straight line that is the least squares best fit to that data series. If the data series is more curved, then one might do a binomial regression or a three-model regression, or in some cases, MBAs can do 100 or more variable regression modeling, which is quite computationally intensive, requires a lot of PC power, but it's very, very doable. And that's exactly what a lot of people do. Most of the work that I do is not that complex. It's mainly linear regression, but I will look at highs and lows in the financial markets, insert them into a spreadsheet, and do a linear regression of the data, and what comes out is the cycle. And it tells me that the data points are separated by a mean regression value of X number of weeks, X number of months, X number of days. It also tells me what the variance is above and below that line, which is the square root of that is called the standard deviation. And that tells us a lot about what has not only happened in the past, but what is likely to occur in the future.
And with your regression analysis, you may not pinpoint the day, you may not exactly predict the future, and of course you're not promising any returns, but as it relates to the analysis of the markets, and markets are inherently risky, don't do this at home, consult your financial advisor, and we're not promising anything here on the radio show or at our firm Wealth Quarterback. But one of the things that I value about you is it's not just buy and hold. It's not just buy and hope. You're also looking at the data points to see, where the next storm. Like I have a friend who says, okay, you can't always see, no one knows when the market's going to crash next, but you can sort of see the dark clouds on the horizon and maybe bring your umbrella. So as it relates to this, let's talk about the big five, how you use that to analyze markets. First, what are the big five?
Josh, years ago, I found that it pays to look for confirming signals or divergent signals in the markets. And I have found that if we follow the big five major indices and look for interplay among them, either confirming or diverging, that can tell us a lot about the health of the trend underway and whether it's likely to reverse. The big five indices I've found are the Dow Jones Industrials, the Dow Jones Transports, the S&P 500, the NASDAQ Composite, and the New York Composite Index. And so what I do as an analyst is not only do I do the cyclical analysis that we just talked about, but I look for the interplay among all five of those. For example, in a healthy uptrend, we're going to see all five of those, as the market makes new highs, we're going to see all five of those components make new highs. Or in a downtrend, generally, you'll see all five of those components making new lows at the same time. But the interesting thing about an uptrend, which is a little different than a downtrend, generally we get V bottoms. It's a one and done thing. There might be a retest. Tops are a little bit different. Tops tend to evolve over time, months, weeks. For example, in the current environment, the NASDAQ Composite topped out on February the 16th.
Now let's take a break real quick. We got to take a break for the radio purposes. So we'll be back talking about these divergences in the S&P, the Dow, what they mean for you, the investor, what they could potentially mean for the markets. And you can't predict everything, but you can prepare. And that's why you should call us at 888-988-JOSH for our preparation conversation. And Stan has been generous to offer a free 45-minute chat with any of you who call us right now at 888-988-JOSH. You get to pick his brain on the markets and where he sees things potentially headed as it relates to your own portfolio. Call us now, 888-988-JOSH, 888-988-JOSH, and you get a rare opportunity to talk with Stan live when you schedule and keep your no obligation review with our firm. 888-988-JOSH. We'll be back after these messages. And we're back with Stan Harley, editor of the Harley Market Letter, chief market strategist at Wealth Quarterback LLC, talking about the NASDAQ and some divergences that you're seeing. So what's going on with the NASDAQ? It's up 1.47 Friday. So as we're
yes, in the current environment, there are some developing divergences that merit taking a close look at. As we speak today, so far, the NASDAQ saw its high on February the 16th, almost 4 months ago. So if you're holding some of the dominant NASDAQ stocks, you may be grousing a little bit, wondering why your stock is not in a new high. But that's how tops are made. They tend to not turn on a dime. There tends to be an evolutionary process in which various indices top out along the way. And among the big five, I look for one or more to start topping out early on. So when we get to the final cyclical high, generally speaking, maybe only 2 or 3 components among the big five will see their peak. Thus far, the NASDAQ topped out 3.5 months ago and has not yet gone to a new high. The Dow Transports, for example, they topped out on May the 10th, almost a month ago. The S&P and the Dow Industrial.
So wait, let's break this down. So we're looking at the NASDAQ. Ernesto, I don't know if you can break up the chart from finance.yahoo.com, and you can see the NASDAQ. So I'm looking at it, and as I see it, the high was it says February 12th.
It was actually the 16th.
Why does it say the 12th on
intraday? The intraday high, that might have been the closing high. The intraday high was on the 16th.
Yeah, I'm not sure what they're using. NASDAQ GIDS real-time price. Maybe it's the close of the day or something, or the open of the day. So
the point being, the NAS topped in mid-February, and here we are now, early June.
You have February 16th, I have February 12th. Okay, so I'm just looking at a simple NASDAQ graph. Then it topped out again on around April the 26th, was as high as 14,138. And we've not breached that high. So in a bullish market, you would want to see us break the 14,000. And just so, what I like about you is you follow the fact pattern. So you might have a thesis, okay, the market might have a correction or might be going higher. But if the data doesn't comport to the thesis, you'll change the thesis. So if you have, and correct me if I'm wrong here, but if you have 13,814, as it looks like what it is today or yesterday, 13,814.49, June 4th. We haven't hit a new high yet. So that's a bad that's a signal that the market might be a little bloated.
Yes, it indicates that the rally is rather mature. And if next week, for example, we see the Dow and the S&P and maybe the New York comp go to a new high, but the NASDAQ does not confirm, the transports do not confirm, the Russell 2000 does not confirm, that is just suggestive that we have an intermediate high in developing. And that's what I am expecting for the moment. and we'll have to see. But right now, the weight of the evidence from the cycles work and a lot of things that I have under study suggests the possibility or the propensity to see a minor new high by maybe the Dow and the S&P, but some of the other indices and other stocks that make up the New York Stock Exchange and the NASDAQ do not go to new highs. And that's a normal cyclical maturation process in the rally as it reaches maturity. And then we should get some type of intermediate sell-off, and then that will reset the clock, and the technical underpinnings will once again be reestablished for the next move higher.
So let's break down each of the five. You got the NASDAQ. The Dow has broached new highs, so that's bullish. So the NASDAQ's kind of a bearish sign. Dow, bullish. Then you have GSPC, which is S&P 500. What's that doing? Where are we at there compared to? It looks like it topped out mid is almost the same as no, that's the NASDAQ. I'm not on the where are we at with the S&P?
Well, the S&P has not gone to a new high yet. So far, it topped out on May the 7th, but it's within a millimeter of going to a new high, and I suspect it will next week. And the same with the Dow Industrial.
So the Dow,
my sense,
and the S&P may hit new highs, but probably not the NASDAQ. And what about the other two?
My sense is the Dow Transports do not go to a new high, and the New York Composite does go to a new high. So we would get essentially 3 out of the 5 components that make up the big 5 going to new highs. But that's noteworthy. And taking that information in context with the cyclical analysis and in context with a lot of indicators that assess some degree of overbought and oversold, and putting all of those things together, a market technician, an analyst, can come to some sense of whether the market is at an intermediate high or is likely to continue higher. And so in putting all of this together, the evidence would suggest, not the certainty, but would suggest strongly that the market is very close to a high. That's something that we're studying very closely right now.
And you're generally still, we're going to get your take on where are you long term. So what do you look to see overbought or oversold conditions?
Well, I look at a number of indicators that assess a trend between 0 and 100% using price, plot them day by day, and the dots as the market moves up, move up towards the top end of the graph, and when the market's moving down, they move down towards the lower. And then once they get to the top and then turn down, that's indicative of the high. There is a little bit more complexity with looking at various time frames.
You mean like advanced decline line? What are you plotting?
It could do that as well. No, just assessing, for example, price based on the S&P 500, looking at a range between 0 and 100 over a number of trading days in the past, plotting them on a graph and looking at the graph visually and looking at how the dots move up and then abruptly turn down when a high occurs. That's one thing that I look at very closely. And I look at it across multiple time frames. The other thing that we look at, which you just described, one can very simply plot advances and declines. One can, for example, get the advances and declines for trading for every single day. The Wall Street Journal publishes this information. Yahoo does. Investors Business Daily does. It's easily available. It's on the internet. And one can, with just a spreadsheet, plot the advances in one column, the declines in the next column, and then subtract the two, and you get a net. And then with that net, in the next two columns, plot a 10-day moving average and a 30-day moving average, and graph those. And one will see that the 10-day and 30-day go up and down above the 0 line, and that assesses a degree of overbought and oversold. Generally, at significant market bottoms, both the 10 and the 30-day will be down, way down in deep oversold territory in the minus region. And a buy signal is rendered when the 10-day component crosses above the 30-day going uphill. That's your buy signal right there. It lags by a couple of days, but that's okay. Then you're looking at a trend that's likely to develop for several weeks. Tops are a little bit different. They are fraught with divergences, so it takes a little bit more of a trained eye, but buy signals are crystal clear. Just utilizing advances and declines. Very, very simple. Our listeners, our viewers can do that on their own if they wish.
And where do you look up the advanced decline lines? The Wall Street Journal? Any websites you like to look them up? Wall Street Journal, Investors Business Daily, Yahoo has this information on a daily basis, and one can subscribe to pay services and get historical data. But that's what I do. So we talked about go ahead.
Yeah, and the data is easily available on a daily basis. It's available for free. If one wants historical data going back years, then one would have to subscribe to a pay service, $60, $70 a month perhaps, to get that data. Dump it into a spreadsheet, do the simple computation and graph it, and one will see, oh my gosh, market bottoms and market highs absolutely can be
they have a rhythm. They have a rhythm that can be detected.
They absolutely do.
And like what you say, cycles happen. You may not get the magnitude right, but you can sometimes get you can see when something's oversold and overbought. So if you look at, March of 2020, when everybody wanted to jump from a building, March 23rd, that would have been a good time to buy.
The preceding program was sponsored by the Jelensky Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelensky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to affect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelensky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation.
Advisory services offered through Wealth Quarterback LLC.